Something unusual is happening in the job market. Companies are reporting steady earnings. Productivity remains strong. Yet hiring is slowing down across multiple industries. Not through dramatic layoffs or headline announcements, but through quiet hiring freezes. Job postings appear and then disappear. Interviews stall. Approved roles sit under review. Internally, companies call it strategic alignment or cost discipline. In practice, it means fewer new hires. There are several forces driving this shift. First, economic caution. Even when revenue is stable, executives are operating defensively. Interest rates remain higher than recent years. Capital is more expensive. Investors are rewarding efficiency over expansion. In uncertain conditions, hiring is one of the easiest expenses to control. Unlike layoffs, hiring freezes create less disruption and negative press. Second, productivity gains from AI. Many tasks that once required multiple junior employees can now be supported by automation tools. Reporting, scheduling, drafting documents, analyzing data, software now handles much of the repetitive workload. If output remains strong with fewer people, expanding payroll becomes difficult to justify. Instead of replacing employees who leave, companies redistribute responsibilities to smaller teams supported by AI. Third, correction from overhiring. During rapid growth cycles, many organizations expanded aggressively. When demand normalized, payroll costs remained elevated. Rather than repeat public mass layoffs, firms are slowing hiring to gradually rebalance headcount. It's a quieter reset. There's also a structural change underway. Companies are shifting toward leaner permanent teams, supplemented by contractors or project-based talent. This reduces long-term commitments while maintaining flexibility. The result is fewer full-time job openings even when business activity continues. For job seekers, the experience feels confusing. Applications go unanswered. Recruiters say roles are paused. Interview timelines stretch for months. Demand appears to exist, but movement slows. That's because companies may want capability without increasing headcount. This creates a subtle slowdown in the labor market. People aren't necessarily losing jobs at high rates, but they are struggling to secure new ones. Entry-level applicants face limited openings. Mid-career professionals encounter longer searches. Recent graduates see fewer campus recruitment programs. The freeze isn't uniform. Healthcare, skilled trades, and logistics still show demand. But technology, finance, consulting, and media are exercising caution. The pattern is widespread, even if it isn't always visible in headlines. The larger question is whether this is temporary caution or a longer-term shift. If AI continues improving productivity, organizations may permanently operate with smaller teams. If economic uncertainty lingers, conservative hiring could become standard practice rather than a short-term reaction. For workers, this changes strategy. Volume of applications matters less in a frozen market. Positioning matters more. Demonstrating efficiency, adaptability, and familiarity with automation tools becomes critical. When openings are limited, competition intensifies. This isn't a collapse, it's a recalibration. Companies are optimizing quietly, protecting margins, and waiting for clearer signals before expanding again. But for anyone trying to get hired, the impact is real. The modern hiring freeze doesn't announce itself. It just makes opportunity harder to find.